Good evening, ladies and gentlemen. We're honored and grateful that you have taken the time to participate in EPLI's investor briefing. It's always a pleasure interacting with our shareholders and giving a sense of what we've been up to over the last few months. I would like to now just hand over to our question and answer section, which is going to be about 20 minutes long. We hope that you found the presentation, insightful, and really just looking forward to hearing some of the questions that you have today and sharing in this evening with you on those matters.
So the first question is, how are you navigating the rising interest rate environment at EPLI and the funds it manages?
All right. Well, we have demonstrated consistent growth across different cycles. And I think we're well positioned with the fact that our assets are typically shorter than our liabilities. So this gives us an opportunity to reprice. And this may actually and should actually continue to benefit EPLI and its leasing business as our net interest margin should increase going forward.
I would just also add to that our team has successfully built an asset management franchise over the last 5 years that produces high-quality earnings that are completely immune to any changes in interest rates. In fact, our business is a function of two drivers of earnings. One, the spread on our funds and how we invest them, which is impacted, and as Justin said, is favorably impacted given our asset liability mix. But the other stream, which is almost equal in size, is completely immune to that, and that is our AUM of permanent capital, which provides quarter after quarter steady and reliable cash flow in the form of management and performance fees.
And for CMF2, we currently have no debt on its balance sheet, and it's well suited in the current environment to take advantage of that. Across the region, we're seeing many opportunities with attractive returns with reasonable loan to values for investors.
Thanks. Have you been able to maintain the spread on EPLI's loan, leases, and receivables portfolio, especially with the rising interest rates and which impact the cost of funding?
We have, and actually we're originating new loans and leases at higher rates than before. In line with the current environment, we have prepared for this and funded ourselves for an environment like this. We thrive in environments like this, and we get to be more selective. We have a lot of dry powder, cash on our balance sheet, precisely for us to be able to deploy into more attractive opportunities in an environment like this.
Yeah, I would also just want to emphasize that all of our liabilities, which are mainly in the form of preference shares, we have very little debt. We have very healthy equity. And most of the funds that we deploy on our prop book outside of our 120 million US of assets under management comes from preference shares. They're all fixed, and they were all raised at a time with much more favorable rates. And so today, we're able to deploy capital at attractive returns, but our funding costs, unlike banks or security dealers, has been fixed. In fact, our team, and Justin in particular, led a fundraising, I believe it was in the summer of 2021, which locked in for many years funding for us at very attractive rates, which we're still benefiting from and expect to for some time.
EPLI has been relatively quiet, with a YouTube page just popping up for this briefing. How much money does EPLI plan to raise for itself or its funds?
We're not currently in the market to raise funds at this point in time. We're assessing different opportunities that may emerge. And we have been strategically assessing how we engage with our investors. We want investors to kind of have a better sense of what we do. Over the last decade, we have been dedicating our resources to delivering results. I think we have done that. We now have a track record that we're very, very proud of. And so this forum is, I think the first of many to kind of give investors a sense of what we've been up to and to expose investors to the exciting things that we've been doing across the real estate portfolio through the EPLI Caribbean Property Fund, the mezzanine fund, as well as our infrastructure fund, which is coming on stream.
Yeah, I'll add on CMF fund. We're in the process of determining the appropriate time with our partner NCB Capital Markets for a raise sometime this year.
I would just also want to add that at Epley, we have a culture, a strong culture that is about doing and not telling. And that served us well for over a decade. That will not change, but I think what you will see more of from Epley is a more concerted effort through forums like this of a very high quality to ensure that all of our investors and prospective investors are well informed about the opportunities that we have. We'll do that not because we want to raise money. We have had no problem doing that. We have enjoyed and are privileged to have access to capital, not just in Jamaica, but across the region. But we'll do that because that is the right thing to do, and that's embedded in our culture. And you should look forward to more engagements like this, always with what those people who know Epley should come to expect, which is a very high quality focus and differentiated approach.
What is Epley's average lease tenure, and what is the main sector for these leases?
I can take that. So average lease tenure, our leases tend to range between 3 to 5 years. It's really a wide distribution of sectors that benefit from the leases that we have, because the types of equipment that and motor vehicles that we have are used across different industries, ranging from manufacturing, retail, distribution, and we're seeing continued growth and demand for these products, especially in an environment like now.
How exactly do prospective investors invest in these projects? Do we buy shares of Epley?
Denise, you want to handle that one?
So currently, Epley Limited as well as Epley Caribbean Property Fund are listed on the Jamaican Stock Exchange. More specifically for Epley Caribbean Property Fund, we are one of the largest listed real estate funds in the region, and we're cross-listed across Jamaica, Barbados, and Trinidad. So there is an opportunity to invest through the stock exchange and to be able to have the type of returns and features that we're talking about here. So definitely speak to your broker about it and do your research, and we can facilitate that.
Epley has a number of different investment platforms. So our shares trade on the Jamaica Stock Exchange. We were listed in 2013, and we would encourage any interested investors to look at those shares. We're not in the market raising capital, but the shares trade. And then we have a number of investment vehicles, as we've mentioned. Denise runs our property business. That is a listed vehicle that's listed in Jamaica on the value fund side. It's also listed in Trinidad and Barbados. And we have a development fund that's also listed in Trinidad and Barbados. And once again, we're not currently in the market raising ordinary shares there, but investors can, at any time in any of those markets, buy and sell shares, and we encourage you to take a look at that. And then finally, we have private investment vehicles in the form of CMF and CIG. Once again, we're not currently in the market doing that. As Adam mentioned, we're assessing those. But when we do, those will all be registered, regulated fundraisers led by brokers, and we would encourage you, as Denise said, to contact them when that arises. But the purpose of this presentation is not to announce a fundraising. It's to talk about the company for the benefit of our existing and prospective investors.
Your subsidiary is purchasing a majority stake in the Epley Caribbean Property Fund Limited Development Fund. Does Epley plan to cross-list these shares in Jamaica?
I think that's a good question. The Jamaica Stock Exchange is certainly the most liquid market in the region. We don't have plans to do a cross-listing at this time.
What will happen with the development fund after the tender? Will management change?
There's no plans for any changes in the mandate as at now, and we're giving opportunity to investors to be able to access liquidity for shares that are very thinly traded at a premium, a significant premium to market. And that really is the purpose of it. It's us investing and showing that we have confidence in the NAV that's published and giving opportunity for investors to obtain liquidity in shares that are thinly traded on the Barbados Stock Exchange.
Will EPLI continue to focus on the asset management business as the key driver of earnings for the business in this current economic environment?
Yeah, I think it's a two-pronged approach. So the asset management business is critical. We've grown it from scratch, since about 2016, 2017. First through the Caribbean Mezzanine Fund, which we co-manage with NCB Capital Markets, then through the Real Estate Fund, and more recently with the Infrastructure Fund. So that provides stable, predictable, recurring cash flow for us, and it's been very good to help us to grow our business. We think it's an opportunity to scale, but it's also combined with our proprietary portfolio, which has really positioned us well to have two prongs of the business that are performing and performing well at the same time, with cash flows derived from real assets such as, equipment, motor vehicles, real estate, critical infrastructure as well that investors can see. And they benefit from the returns through the cash flows distributed in the forms of dividends primarily, as well as other distributions from time to time.
I would want to also agree with everything Justin just said, but I want to step back and just say that at EPLI we have a clear belief in what we do, and investors should know what that is. And that is that we've built a business to address inefficiencies in Caribbean financial markets. That's our North Star, that is that's our mandate, and that's what we do every day. That had led us initially into credit on our own account, but more recently that's led us into the areas that Justin has described. So whether we're investing our own resources, whether we're doing that on behalf of people whose funds we administer and we manage, or whether we do entirely different things that don't exist in our business today, what you can as an investor expect is that Justin, Denise, Adam, myself, and the team and our board, led by our chairman, P.B. Scott, will be thinking about how to address inefficiencies in our markets, because we believe doing that delivers sustainable returns adjusted for risk. Our track record demonstrates and validates that that's true, and that's what you can expect from us in the future, notwithstanding exactly what way we do that.
Does the possibility exist to list some CIG vehicles or use a JSE as a route of financing?
Yeah, I think the possibility exists. It's not in the pipeline now for that to take place.
Yeah, we believe that the JSE is a powerful tool. We've used it. We're proud to be an institution based in Jamaica, even though we're regional in focus. Jamaica has the deepest capital markets in the region, and we've used them. But that's not the only mechanism to deliver liquidity to shareholders, and there are many instances where some of the institutional investors that we work with have a preference for the shares not to be listed. So we will continue to evaluate that on a case-by-case basis.
Is EPLI planning to have quarterly briefings?
We're looking at, how best to engage with investors. I think this forum gives an example of how we've, adjusted our approach to engaging, and we're looking at this. It's not our plan at the moment to have a quarterly forum like this. This will probably be more of an annual event, but we'll continue to update our investors through our quarterly published financials, as well as our audited financials, which will be published in line with regulations as well.
Are there any pipeline opportunities for the Value Fund?
At the Value Fund, we are always, as is our mandate, to find opportunities for income-earning real estate within the English-speaking Caribbean. As it stands at this point in time, we continue to evaluate opportunities across the region. We know that there is increased interest in Guyana, for example, as one of the fastest growing countries in the region. We don't currently have any investments there. However, the opportunity exists for us, and we continue to look at that. And opportunities, again, are assessed based on fundamentals on a bottoms-up approach, and they must fit within our requirements for our hurdle rate. So when there is more information that is available to share, we will share that, but we continue to look throughout for opportunities.
How much cash does CMF2 have to deploy, and how much leverage does CMF2 have?
So as mentioned in the presentation, we manage risk carefully. CMF2 has a strong balance sheet, and we see this as an opportunity, and we continue to assess how we can, if we need to take on leverage, which is appropriate for CMF2, this will, it would improve the overall returns for the fund. But in terms of our current cash balances, the fund is private, so I'm not able to disclose. But what I can say is that between NCB Capital Markets and EPLI, our pipeline is well in excess of the cash we have.
Why would EPLI fund managers take a majority stake in the development fund trading at a discount?
I can take that one. I think it's really a good question, and it's demonstrative of who EPLI is. It's not common for managers of mutual funds to purchase such large blocks of shares in their mutual funds. Most people who do that in Jamaica and globally are happy to have very little capital at risk, very little alignment with their mutual fund shareholders, and happily collect their fee. That you'll never find that to be the case with EPLI. EPLI is primarily a principal investor that views everything as their own, has our own significant resources, and as this transaction demonstrates, is willing to be decisive and use those resources to create shareholder value. That's unorthodox, that's contrarian, but EPLI is unorthodox and contrarian. So the reason we're doing it is it's good for shareholders in that vehicle who would like some liquidity, because the shares are thinly traded in Barbados. So for those who, for time preferences, for alternative uses of their capital, would like to exit, we're providing that liquidity to them. But we're also creating a lot of value for any shareholder which remains. And we're demonstrating with our own capital that we will eat our own cooking. And we will do so even at a significant premium to the market price, because the underlying assets are, as we have consistently disclosed in all of our disclosures, of a very high quality with a very bright future, and we're putting our money where our mouth is.
I would like to add to that, since Nicholas spoke about alignment, I would like to just touch on CMF2 and also acknowledge our partner, NCB Capital Markets. They've been with us and partnered with us since 2017 in this strategy when, we were a lot smaller company at that time. And the mezzanine fund, this is the vehicle that we use to invest in mezzanine. The managers own over 20% of this fund, and we rely on it for the dividends. And the shareholders within this vehicle are invested alongside us.
Absolutely, Adam, and I think we could broaden that and say that one thing which distinguishes EPLI from other managers is our willingness to deploy our own capital in our strategies. And that is what is happening as per this question in the development fund. But it already exists in all of our other vehicles. As Adam mentioned, we and our co-manager are significant investors in CMF. Ourselves and our co-managers, Jamaica Producers, are significant investors in CIG, where we're not only earning fees by investing on behalf of others, but we're putting our capital at risk. And even at ECPF in the Value Fund, the largest shareholder of the Value Fund, which started at zero and is now the largest shareholder, is an affiliate of ours. And our directors and our executives are, in almost all instances, shareholders as well. So we have a long tradition, culture, and mindset of being aligned with our investors, and this transaction is just a continuation of that.
What other types of projects does Capital Infrastructure Group expect to commence in the next 12 to 24 months?
Well, it is a private fund, so I think it would not be appropriate for me to speak about specific investments other than those that are already in the public domain, like the Rio Cobre project. But I think you can expect that throughout the English-speaking Caribbean, and in Jamaica in particular, CIG will be playing a role in financing investments in areas like water, renewable energy, and other forms of infrastructure. And that's a fairly broad asset class, which encompasses, as I said, water, energy, transportation infrastructure, and even digital infrastructure as well. So we don't have any announcements to make at this time, but you should expect to see more of what has been in the public domain, more projects that are akin to the Rio Cobre project.
Please update us about your share buyback scheme.
So there is an approved share buyback program where we look for opportunities to acquire the shares below the net asset value of the Epley Caribbean Property Fund in particular, which is, within my portfolio. I'll speak to that. This creates an opportunity, of course, for us, as, would have been mentioned before, where we see that the net asset value is, we believe in the properties that we have, we believe in the core value that they have, and if they're trading below the asset value, then there is an opportunity for us to jump in and to reap the benefits of that. So that's really the mandate behind our share value.
Yeah, and I would add that the share values would be underpinned by independent valuations which are conducted twice per year. And in addition to that, the financials are audited. So these valuations, we think, are fair and independently certified by third parties.
Sam, I would really be remiss if I didn't take the opportunity of this question just to point out to this audience, as we have consistently in all of our recent shareholder letters, that we believe the shares of the Epley Caribbean Property Fund, and I'm talking now about the value fund that's listed on the Jamaica Stock Exchange, that those share prices are at a significant discount to NAV. And we would encourage investors to take another look at that. Our assets in this fund are all, as Justin said, appraised independently on a periodic basis. We have very little debt. And the discount persists. We, as you mentioned, continue to buy back the shares through the share buyback, but we think it's a very compelling investment opportunity. We're not raising capital at this time, but on the secondary market, we think it's certainly worth a look given where they're trading, given the underlying cash flows.
We have time for one last question. How will the Rio Cobre project aid in the development of Jamaica?
I'll take that one, Sam. Epley, as I mentioned, has a philosophy that to serve our investors, we can address inefficiencies in Caribbean financial markets. And we do that because we think that's how we deliver returns to shareholders with limited risk. But we also believe that these strategies have a developmental impact in that they provide risk capital to projects that are badly needed, that are underserved by, in many instances, the traditional financial system. Infrastructure investing is a great example of that. The Rio Cobre transaction is one where ourselves, through CIG, with our great and outstanding partners at Jamaica Producers, and our partners at Vinci, French multinational that's one of the largest infrastructure players in the world, have partnered together to construct what will be the second largest water treatment facility in Jamaica. It will deliver about 8% of the water supply in Jamaica, about 20% of the water supply to the Kingston and St. Andrew metropolitan area. And if we're able to do this and complete this, we will have contributed to Jamaica in constructing that facility, a facility that will provide additional water, the most critical resource, to the NWC, and have it serve its customers as the country continues to grow, most directly in the St. Catherine area. We will have done that at no fiscal cost to the government of Jamaica, purely as private institutions in partnership with multinationals. And it will be a demonstration of EPLI's capabilities, but it will also be a demonstration, frankly, of many other stakeholders. The government of Jamaica, the Development Bank of Jamaica that has been critical into this process, the NWC, the OUR, Vinci, and the entire ecosystem of public and private partners. So we are very excited to be part of that project. We're extremely privileged to have been given the opportunity to be one of the shareholders in the company that will be undertaking that very important national project. Sam, are there any other questions at this time?
No other questions. Thank you.
I would want to encourage any shareholder that has not had, any investor or any other interested party who has not had their questions answered, to please email them to us. EPLI, notwithstanding that this is a different format for us, has a long-standing belief in how important it is to engage with our stakeholders. So please let us know, and we'll respond to that email promptly. But at this time, I would just like to extend thanks to our team, my fellow people on the panel here, Justin, Denise, and Adam, the entire EPLI team, for organizing this. I'd like to thank our partners at Market Me for helping us, and I'd also like to thank all of you for taking the time to log on and to listen. Please send us additional questions. We look forward to your feedback, and you can expect more engagements from us like this in the very near future. Thank you very much.